If you ignore this signal from the Federal Reserve, you are setting yourself up to completely miss the 2026 bull run. Period. The Federal Reserve just handed crypto the ultimate gift, and while the entire mainstream media is obsessing over this tiny 0.25% rate cut, they've all missed the real story. The real story, the signal that truly matters, is the dot plot. It's the confirmation that cheap liquidity is flowing back to the very banks, we're talking institutions like SBI and Standard Chartered, that are actively building on the XRP ledger. This isn't just another rate cut. This is the liquidity green light we've been anticipating since 2024. And by the end of this explainer, you'll know exactly how to interpret this signal before anyone else. So let's first break down what has everyone so distracted. The headline rate cut? Yeah, it gets all the airtime, but it's just surface level noise, almost designed to keep you from seeing the bigger picture. The market-wide consensus was a 25 basis point or 0.25% rate cut. This was expected to lower the Fed's target range to between 3.50 and 3.75%. Pretty straightforward, nothing to see here, right? Now, what's really interesting here is how irrelevant the cut itself is. The market had already priced in an 89% probability of this exact move. In Wall Street terms, that means it's old news. The cut itself is not going to move the market 1 inch. The real danger, the ghost in the machine that all the institutional traders were watching for, is something called a hawkish cut. This is where the Fed gives the market the cut it wants today, but then Chair Powell steps up to the mic and signals that future cuts in 2026 will be much slower or maybe even paused entirely. That would be an absolute rug pull for the markets. And that is precisely why the rate cut is a complete distraction. We need to look right past it and focus on the single most important chart released today, the signal that truly matters. So what exactly is this dot plot, and why does it hold the keys to the entire crypto market's trajectory for 2026? Its official name is the Summary of Economic Projections, but think of it as a peek inside the minds of the people at the Fed. It's an anonymous chart showing where every single Fed official predicts interest rates will be in the coming years. But here's the crucial point, the only detail you need to care about. We are ignoring today's rate. We are laser-focused on the projections for 2026, because back in September, the Fed projected only a single rate cut for that entire year. That's the number to beat. So how does this abstract chart from a government building in DC directly fuel assets like XRP, XLM, and HBAR in your portfolio? Let's connect the dots, because this is where the money is made. It's a chain reaction. First, the Fed projects more cuts, signaling that cheaper money is on the horizon. This directly lowers the cost of capital, the cost of borrowing for big banks. With cheaper money, those banks have the incentive and the capital to fund and adopt new financial technologies. This leads directly to the expansion of payment corridors, using systems like the XRP ledger's on-demand liquidity. ODL lets institutions transfer value across borders instantly using a digital asset as a bridge, which gets rid of the need for costly pre-funded accounts. It is a direct pipeline from Fed policy to real-world crypto utility. This says it all. Liquidity is king. When the cost of borrowing drops, the very institutions positioned to use networks like the XRP ledger get the financial green light to innovate and expand. Cheap money is the rocket fuel for enterprise adoption. This brings us to a clear fork in the road. The dot plot is about to reveal which of two vastly different futures we are hurtling towards for 2026. So let's look at how this plays out. On the left, the bullish case. If that dot plot shows 2 or even 3 rate cuts projected for 2026, it's a massive signal that cheap money will continue to flow. This fuels enterprise adoption, and the utility coin sector could go absolutely parabolic. On the right, though, is the bearish case. If the Fed stubbornly sticks to 1 or 0 cuts, liquidity evaporates. We could see a monumental sell-the-news event, potentially sending Bitcoin plummeting below $90,000 and dragging the entire market down with it. The entire direction of this market hinges on this single data point. Okay, so knowing all this, what's the action plan? How do you position yourself to stay ahead of the curve? The takeaway is incredibly simple. You must ignore the headline noise about the 0.25% cut. The only number that matters, the only signal, is the 2026 dot plot projection. For crypto global news, if you want to stay ahead of these critical market-moving events, you need to smash that subscribe button and absolutely obliterate the bell icon. You cannot afford to miss these updates. And for all our viewers, especially those in the US, you know the algorithm is hiding crucial information from you. Join our Telegram for the uncensored updates you won't get on this platform. Use the QR code on your screen or hit the link in the description. But that leaves us with the next billion-dollar question. Assuming we get the bullish signal and liquidity is secured, which specific financial institution will be the first to announce a major new payment corridor in 2026? We break down the top 3 contenders in our next explainer, which you can check out right here on the screen. I'll see you there.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.